Happy President's Day, good people. Your humble CIO, Jonathan Camarda. Where do we start? Well, I guess we can start with the Ukrainian-Russian tension, which has been on the forefront of some of the recent spate of volatility. However, really that's just the very beginning, as the larger macro picture really revolves around the Fed and their balancing act of staving off inflation while not stoking recession in 2023. Yes, I said the R word. And really, to illustrate that, the confluence of economic news that we're looking at right now is if you look at retail data and PPI data from last week came in red hot. But in confluence to that, the real estate data, not so much, as we have a undersupply and an over demand, which looks great for median house pricing. So if you're looking at your Zillow account, looking good. However, that really portends of dour consumer sentiment and economic activity as we move forward throughout the year. Now, the off-maligned supply chain woes that we usually is the main culprit in what we talk about inflation certainly has shown some signs of abating as inventories have started to creep up, believe it or not, in certain sectors. However, analysts fear that as that continues to be the case, that economic sentiment and consumer demand may actually wane throughout the year, which again would point towards hopefully Jerome Powell, just this analyst's opinion, looking at very much being prudent with, again, yield curve moves to, again, walk that fine balance of not overcorrecting the inflationary situation and creating potential recessionary winds into next year. Now, speaking of the markets, we're looking at the S&P, NASDAQ, Russell, and Dow Jones, all being below both their 50 and 200-day moving averages. Not great news. With the NASDAQ and Russell, with the 50-day moving averages below the 200, what they call the death cross. But really, we're in kind of a topping pattern, is what that says in English. Really, what is to be seen, however, is if we have a stealth decline from here or more of a sideways digestive pattern into the spring, which is why you'll see the eternally vigilant moves we're making to your asset allocation percentages on our strategies on a more frequent basis than during more normal markets is playing that balance between risk on, equities and such, and risk off cash, gold, and such. Glimmers of hope out there actually are Europe and emerging markets, as we've been looking in those areas. They have been so undervalued that they actually have a lot less risk to the downside based upon the quantitative data we're looking at than the U.S. So again, we continue to keep our eye on that. Now, as we maneuver through and look at the sectors, technologies, and discretionaries, of course, of taking a pounding, the weakest sectors with consumer defensives and cyclicals being your beacons of hope, for lack of a better adjective, in this environment. Another thing worth noting is that we're keeping an eye on yields of longer term, 10-year and above duration fixed income, as there is a widening spread between their yields and the S&P 500 dividend paying stocks. And what this means in English is, as that continues to happen, you could see a flight from investors that are looking at safety and dividends back to higher yields, even with the threat of a rising yield curve. Right? Think of a roller coaster and the inverse effect that has on bond pricing. Increasing yields on those bonds could still create a bastion of hope during times of volatility. We continue to be vigilant looking at that as well. In one little shimmer of light, Omicron cases continue to drop off, perhaps opening up some green shoots into the spring and perhaps travel. Stay tuned, as yet to be seen, of course, with any certitude. Once again, if your risk appetite is a question regarding some of the strategic moves we're making in your allocations, certainly reach out to your personal wealth advisor for more granularity on an individual basis. Other than that, we will continue to be eternally vigilant, serving you and your families. We appreciate your time and your patience, and most importantly, your trust. Enjoy the rest of your 3-day weekend, and as always, stay frosty.